What is good, everyone? BGFX here. Welcome back to a brand new video, and salute to all you guys who are watching. Today I'm going to be going ahead and diving into some of the opportunity which was available throughout the year so far. Now these are all trades that I took, and the opportunity so far for the year has been great. I've really just been sticking to the plan. As you guys can see, background looks a little bit different here. This is my new setup. Thankfully, we have it all set into play, and now this is where everything happens. So I get on the charts at 2 a.m. I'm in Louisiana. 2 a.m. is when London starts. I get off the charts at 4 a.m. I take a break. I get back on the charts at 7. I trade for a couple hours, and then I get off the charts at 9. So that's kind of the way I like to operate. Like I said, I like to get in, focus in, take what's there, and then get out. That's like my way of doing things when it comes to trading. And yeah, man, so I hope y'all enjoy this video. I hope y'all get something new out of it. And if y'all enjoy, make sure to hit the like button. Make sure to subscribe for future content. This is going to be the new area right here where I make YouTube videos. And yeah, so I'm looking forward to bringing you guys more stuff about psychology, as well as technical analysis, and really anything that brings value as a trader. So this is kind of what the YouTube channel is about. Anything that I go through within my trading journey, anything I learn from, wins, losses, psychological breakthroughs, things that I noticed that have helped me, I like to share it. I like to document it here, so I can kind of reflect on my journey as a trader. So thank you guys so much for the support. Thank y'all for watching. Make sure to hit that like button. Let's go ahead and break down the charts. We can now roll the intro, and I'll see y'all in a second. Okay, so we're back on the charts. And the first thing I want to do is explain the belief system behind every trade that I take, right? So we want to go ahead and understand something about the Forex market. The Forex market is pushing $7 trillion a day worth of daily volume. As this volume fluctuates, we need to understand where this volume comes from, right? People call them different things. You call them the banks, the central banks, the BFIs, the financial institutions, whatever you want to call them. It's a fundamental truth that they are responsible for a large chunk of the volume you see on a daily basis. And there's one thing that gives life to the market, and this is one of the most crucial things to understand. The one thing that gives life to the market is orders. A lot of people do the contrary belief. A lot of people believe that support resistance moves price, or Fibonacci and measurements moves price, or geometry moves price. But the truth is, the only thing that gives life to an exchange is orders. If you have a cryptocurrency and no one wants to get involved, it's going to stay at zero. If you have a cryptocurrency and everyone buys it and there's such a high demand for it, it's going to skyrocket in price. So the more volume and transactional data that the market receives, the more fluctuations of price we're going to see. As you start to understand the concept of what orders do to the market, you can begin to look at footprints, and you can use these footprints to look for high quality opportunities on an intraday basis. So this is going to be the first trade. Let's go to my Instagram. This was a 1 to 14 RR sales. Ended up taking some partials out right here. Around this level, it retraced a little bit, and then we continued lower, right? So I was basically selling from the top and basically just catching an extension back down to the bottom of the range. Go ahead and go to the next one. This was at 326. I said I'm in these sales right now. This was within the Discord. I said I'm in these sales right now. Whatever happens, happens. I had to be quick about this flip. So you can see it was pretty early on in the entry. We were just ranging a little bit. So the Discord, the main purpose of this is to dive into a little bit of everything. And it's to provide a source for new traders who are looking to get put in the right direction. Not only strategy-wise, but also mentally, focus-wise. What type of routine do you need? What should your habits be? This is all things we cover, right? But I don't want to make this an advertisement for the Discord. I just wanted to show y'all why this message is shown. So let's go back to the analysis. So it's 3:26 a.m. Had to be quick about this flip. 3:46 a.m. 20 minutes later, we're melting off, and this was the 1 to 14 RR, and we're out 14 R in 25 minutes. So this is kind of what things were looking like, and that was before, that was after, and then this was my entry. So let's go ahead and break down the charts a little bit and see what led to the entry itself. So I'm on a 15-minute time frame right here, and I'm basically just kind of analyzing our current market conditions, and you can see that we were really within the range here. We were consolidating for a good bit. And what I started to notice, right, is that we're moving within daily cycles once again. So we have Asia's range right here, and now we're trading up out of Asia's range. And I'm analyzing the origin of the high volume spike just like this. And when we see a return to it, it's possible that it may be protected, because we understand the idea of supply and demand. Supply and demand will basically tell us it's a large sell order, and if this order is to be protected, we're going to need to see lower pricing back into the edge of some other range. So I'm essentially just looking to play the edge of a range here. So we have the top of the range and then the bottom of the range right here. This creates the 15-minute range. I'm just playing the edge of the range based on lower time frame intention. Then I'm understanding my daily cycles. We're coming out of Asia, and I'm looking for opportunity within my zone. So the 1 minute time frame, you can now see that we're just kind of trading up and out of Asia session. Asia session's high. We just kind of consolidate up and out of it. At this point, we really haven't approached my zone yet. On the 15-minute, I drew the wick out itself, because this wick, of course, on a lower time frame is a supply area. Some people will call this a supply wick. But the main idea is that this wick was responsible for fairly impulsive price delivery that we can map out right here. And now once we return to the origin, it's just a possibility that more volume is stacked within this. So if a large order brings price down here, we would understand that it has to be a high volume order to actually move price. When the markets return to it, some of that same volume is going to be stacked in that same place, since you can't move your entry price. Some of that same volume is going to be stacked, and oftentimes if you can identify the right footprint, you'll see reaction off of it based off of the intention that the market wants to show. So now that we're moving to the 1 minute time frame, I just want to allow the 1 minute to kind of align with it and build a story from here. And another thing I'm looking at is my time. I want to make sure I'm within my sessions. I want to make sure that the timing is logical as well. And what we see here is that we're beginning to trade off. And from this point, we're still kind of respecting, right? We're still kind of respecting all these zones. Order flow is fairly bullish. I'm not really seeing any type of transition up until this point, right? Now, this would take a lot of explaining to do within the YouTube video, but basically we decide to violate the supply wick here, and we leave my low insufficient within the price range. So if I go ahead and I take a look at my high, I would understand, right? This is the top of a range, top of an M1 range, and then this low here will be the bottom of an M1 range. Bottom of M1 range. So I'm identifying where I'm at here, and I'm also analyzing the fact that this range is coming from the 15-minute. My top of range is coming from supply. The bottom of my range is coming from nothing, right? So when I actually take a close look at price, we trade beyond this purple zone just by a little bit. So what I'm doing is I'm comparing my bearish range to my bullish range. So my bullish range is here, right? It's going to be this consolidation followed by the up move. So this is my low, this is my high. So if I'm playing the intention of a supply, I would at least expect price to trade down into the edge from here, because I have a belief system that price moves from edge of range to edge of range. So we have the low here, and what I'm expecting, right? I'm at least expecting price to fill this gap within the range. And what I'm doing is I'm entering at the edge of the M1 range here, and I'm using this small mismatch to go ahead and build a story behind trading with the 1 pip stop loss. So this was literally only a 1 pip stop loss. And it's not like I'm only looking to target back down into the M1 range, because remember the M1 range is just right here. But what I'm doing is I'm using this mismatch of ranges and where my low is placed in order to get the market moving in my direction. Because you got to understand, Forex is not like stocks to where you can buy up shares. One of the most logical ways to trade Forex is to get in with low drawdown and hold a winner in the most efficient way possible. Because risk to reward is so crucial in this game. But basically, my stop would be at the high here. And then I'm just playing the edge of my M1 range right here. So this is my entry. I'm at least expecting it to gravitate to this range. And if it decides to go bullish, that's cool. I'll just be risk-free. But my entire process is that I'm playing the edge of the M1. And I'm going to come to the 15-minute really quick. And I'm going to identify what looks decent. I'm probably going to look somewhere within this. And then I'm going to look to play the edge of this impulsive move up. So remember, we're always within different types of price ranges. you can see that this high into the low all the way down here is a price range, right? And we're beginning to trade up into it. Now, if we don't respect this, that's okay, because you now have all these different highs which create ranges. You're just looking to play the intention at the range, which shows you the clearest narrative. And I took my entry here, and then let's go back into this. You can see that mini sells, and I was literally something like this right at the time, and we were just beginning to range. So what I really wanted to see was at least see this low clear and then see that M1 range come lower. And then let's go ahead and press play. See, we begin to drop off a little bit. At this point, I was risk-free within the markets, and we're beginning to react a little bit. This isn't really something that I'm worried about. Got to understand that all these little areas are areas where volume could be stacked. So what we see is just little small impulses followed by continuations, and that's always good to see. I don't like to see too much of a slowdown within my entries. I like to see more of aggression, momentum, and intention. So at this point, my take profit was hit for 1 to 14, literally within, I believe, 30 minutes. So yeah, 25 minutes, and I took a little bit of partials. It was a little bit up here, and this because this was the bottom of another range, which was very impulsive, and that's what traded into this footprint right here. So that was a narrative to me that seemed smart in the moment. And basically, we were just playing that Asia range manipulation of the high, Asia's highs being liquidity, and then catching a sell with the correct narrative. So that was my 1 to 14, right? And this was a pretty solid trade setup. This was taken for a London session. So it was like 3 something for me. This was 3:20 a.m., right? So that was going to be the first trade that I got involved in. Now, the second trade is going to be buys. This is going to be a super similar outlook. You see that we had this wick here. This wick right here was once again just a small attempt for price to move down, followed by that aggressive move up, and we created the origin of a price range. So now that we're returning, I kind of just want to play the intention here. One thing that I was seeing about this price range, right, is if I look at all my other OBs / supplies, whatever you want to call them, we had the reaction and then no follow through to the direction of the current trend. We were immediately showing that reaction and dropping off, and then that reaction was just becoming future mitigations for lower price. So throughout all this delivery here, I was mainly looking to follow the flow until I seen the origin of the main volume, which was here. So this wick, this down, this sell into buy move created that footprint. And then once you return to it, like I said, it's possible if we play the correct intentions that you can begin to even catch this a sharp move of price. Even if it's 15, 20 pips, you can walk away with 10 to 15 risk to reward if you know how to play the narrative right. So for me, the main areas of focus, right, is building these intraday narratives, building a 15-minute story, and then after the 15-minute story is beginning to is clear to me, I'm using a 1 minute time frame to confirm a narrative, and I'm putting most of my focus on good decision making, making sure my psychology is right, and then just playing the concepts to the best of my ability. Now, what I've seen here, right, is that we were trading and we had this little bullish candle right here. Now, the first thing I noticed is we're having some potential aggression. So I'm gonna map this off. Let's go ahead and make this, let's say, green, and let's do it like this. So boom, we have this candle, and this was some aggression. So I was looking at this in a moment, and what I noticed, right, is that we do break a little bit of market structure. So I'm just gonna map that market structure break off. Let's go ahead and make that, let's make it red. Okay, so yeah, make that red. Now we broke the market structure. Now, once again, I'm looking at details within my range, and I understand this is the low of an M1 range. This was the high of an M1 range. So preferably, I could see that this low here was created. This low really didn't tap into the extreme of that range much. So what I decided to do was put my entry a little bit lower. I'm going to come to Instagram really quick just so I can get my exact entry. And it was 1.3652. So let's go to 1.3652. You can see I was basically putting my entry a little bit below the previous low. And then my stops would most of the time be valid at the bottom of the M1 range. and then I wanted to take my profits all the way up here for a 1 to 10. So essentially, we have that long-term range, which I know was set in the stone from this sell and the buy move all the way up. This reaction here was just coming from, once again, another higher time frame zone. So you could have looked to play any intention within this. But once we actually met the edge again, I was kind of having somewhat of a short-term bias. And what we see, right, is we're coming out of Asia into my zone. So that's something that's also kind of confirming something to me. And what we see, right, is that my high is here. And now at this point, due to the way my M1 range is placed, I'm okay with taking the buys at this time. And I have my final targets here, and then I have my first targets here. So let's go ahead and put 2 positions, because I secured half of the position right here at 1 to 5, just because I was kind of counter to the overall long-term volume. You can see how that long-term volume was really moving to the downside for the most part, and now we're just playing the edge of the range to see if we can pull some momentum out of it. So yeah, and just allowing that M1 structure to really tell the story. So I had one position in right here. I took the buys after we sweep the low, after we swept this little candle here, and let's go ahead and see. Boom, I'm triggered in and immediately moving up aggressively. Something I really like to see. Like I said, I like to see my intention. I like to build my story. But when it comes to my entry, I really just prefer to see quickness, sharpness, and just aggressiveness out of my entry. And that's telling me that I'm building the right narrative, if that does happen. So at this point, boom, I'll secure, I think, half of my position at this point. I have to come back to the Instagram post. So yeah, buys right here, secured 50% of it here, and then the target too was up closer at the edge of that range. And then you can see this was my buys. So we kind of begin to consolidate a little bit and kind of take our time. And then what I noticed is, once again, this 1 minute range is kind of condensing this price delivery. So it's condensing its way down into this. So that's something just to be mindful of. And to me, it wasn't really something I wanted to see, because there's a common characteristic when price is trading in a bearish direction. What it likes to do is it likes to impulse down, create a low, and just begin to range and accumulate enough volume, maybe trick some people into buying, and then it just impulses down again. So that's why it's really important to know when to play certain narratives and filter out certain zones. So that's why I like top-down analysis, and certain traits within price are so important to me. So yeah, at that point, I just secured half of my position, and the rest just was closed out for like 1.8 pips or something like that. The next trade is the trade that I took, I believe, about a week ago. But the 15-minute time frame was here. I sent this out once again in the Discord with my students. We talked about it a little bit in the Euro USD channel. Now, we talked about in this channel, this is where we typically talk every day. You guys can see that, like, we are very active. I'm basically talking with people every day. But within this channel here is where I sent the zone for the sells, right? So these were the 1 to 8 RR sells, and this was the last trade that I took. This was a 1.7 pip stop loss with a 14.5 pip reward. This was a 7K day, and it was the only trade of that week. And this was a type 1 entry. I have 2 types of entries that I work with, a type 1 and a type 2. Depending on what I'm seeing, I know how to classify it through each different one. But let's go ahead and break this down really quick so you can see, right, that we're reacting here. We created a 15-minute price range. We have the high, and then we have the low. And I'm just looking to see, right, will I see intention at the edge to potentially target down lower into something like this? Or will price continue bullish? And I'm just going to use that M1 intention to actually read the delivery. And then once again, I'm just playing the this entire footprint right here and looking to see what price wants to offer me, right? So let's bring this down a little bit, and I can see that I basically have a higher time frame narrative together, and I'm just once again viewing my daily cycle. So we had Asia range, we broke out for London, and then where are we now? We're now in New York. So I like to separate my days into different sessions, because the sessions is when the volume is the highest. That's when BFIs tend to get most active, and that's when I'm really most attentive. If they're going to protect zones in certain positions, and they're going to place large orders in that typically affect price, I'm going to be wanting to be in the markets at that same time so I can speculate when these things could potentially happen. So what we notice is we're just coming up once again out of the Asia range, and London creates its high here. So I'm really looking at timing. Timing is a huge factor for my entire trading approach, especially when it comes to me building narratives. I believe that certain highs and lows are set in at certain times, just so future volume moves can sweep those highs and lows. So we see that we had this high, and we just really begin to consolidate below this level, and all of this consolidation begins to build up a little bit of liquidity, you can call it. And just me understanding that all this is happening right below my high time frame zone is kind of giving me an idea, right, that if price runs up to this, I can now look for sell opportunities if they're provided. Now, within this here, there was no sell opportunity for me to get involved because there was no entry model that met my plan here. But what I noticed is that we now had this range and we're now pulling back into it. So my session timing is beginning at this time. It's 7, which starts here, and it's going to last all the way up into 9. So anywhere within this gap, if price decides to provide the opportunity, then I'm perfectly fine with executing in and playing the edge of this range right here and just targeting what seems most logical to me. So what we see is we're now just kind of beginning to trade back to the upside. And at this point, I'm really just looking to analyze intentions and see what price wants to offer me. So at this point, we're beginning to react a little bit. We have a little bit of aggressiveness. And what I see is that I have a bullish range here. So I noticed that we have this wick, which is kind of shows that last down in the up move, which shows the edge of an M1 range or something, maybe even on the seconds. And then I have the high of price, which is here. And now I just want to map the low of the leg. So if the leg low happens anywhere within this level or this level, it's going to be very logical that we're at least going to want to trade lower and mitigate. So that's kind of what I'm looking at this point. And I'm just looking for the 1 minute time frame to tell me the story. So this is my low now. And what we have is the top of my M1 range. Top of M1 range. And we have the bottom of the M1 range. M1 range. Right? So we have the bottom of the M1 range. And I'm just analyzing to see if there's some type of edge that makes sense. And you can see that this wick would just basically be a bullish candle on a lower time frame. So now I'm just looking to play the origin of the initiation, which moved price down and created what I would call a type 1 entry model. And then my stops are always valid at the high because I'm playing the M1 range. If the range is broken, I'm expecting something else to happen. So this is safe for me to be at the top of the range. And then what am I doing? I'm just mainly targeting the edge back to the downside. I don't have any type of pip target. Really nothing about my trading approach is even based around pips. Everything to me is based around structure, ranges, edges, entry models, and zones, and just daily narratives. So anything that makes sense for me to play on the intraday narrative is the way I'm going to play it. And it's always going to be structurally. It's never going to be based around pips. So this just so happens to be a 1.6 pip stop loss. For me, the most logical place to play this would be back down into this, since this was like the origin. We have this low into this high. And I would just mainly be playing that extension or that retracement back into here. And if price wants to get bullish from this OB, that's cool, because once again, I'm just playing a narrative that allows me to get out regardless of the outcome of that. And I'd be getting out with a 1 and 9. So you can see, boom, at this point, I was now triggered in. And then we begin to react a little bit. We're still trading up above it. Now we're trading higher. But the question is, are we actually violating the high of the range? And if we aren't violating the high, that's telling me that sellers could potentially be taking control within this move right here. And I could at least look to take it once again back down into this level. So we would really have to just continuously read price in this case and really just be smart about it. So we begin to react a little bit, begin to trade off, and then once again we start having that impulsiveness out of the zone. Something that I'm always looking to see, something I enjoy seeing, is the aggressiveness within the direction that I'm looking to take price. Remember, I like to be in and out of price. I don't like to be within any type of range-bound market conditions. I use ranges and slowness and stacked highs and lows as intention for a proper trade. I'm never really looking to be in a position when something like this is happening. I'm looking to identify my edges and read intention behind the edges, and then I play whatever seems high quality from there, and then we just snap to the downside. I couldn't even close my trade quick enough when I was in this. By the time I closed it, we already pushed down and we started wicking up slowly, and realistically I closed down here, but I'm just gonna say it for analysis sake that this was what I was basically capitalizing on, was just this extension back to the downside. And then we had our 1 minute here, we had our daily session high here, we're just playing the edge of, and then we had our longer term zone all the way back here. So just to do like a quick overview of everything, like I said, the 1 to 14 was the first trade I took. This was the type 1 model. There's just a little alert or whatever you'd like to call it, 14R in 25 minutes. Then we had my buys, which were just a quick aggressiveness playing the edge. And then this was the video right here. I'm not going to put the sound on for copyright reasons. If you want, you can go to my Instagram. You can check out how I basically recorded this whole process in real time. And I just shared it as content from that. And then this is the trade itself. Before, after, 1.7 pip stop loss, and the target area was in that area right there. So as of now, February 9th, 2022, I haven't lost a single trade this year. I'm really being very patient with my approach. I'm really putting a lot of my focus into proper decision making, patience, and just playing the smartest narratives that I can. This is why I only trade one pair. I like to put all my focus in one place and keep all my focus on the same pair for both sessions, because at the end of the day, the route to profitable trading just comes from consistently playing the approach that you believe in and getting better at it over time. You know, consistently refining your mentality, consistently getting better at these things, and that is how you continuously improve as a trader. But I hope you guys enjoyed this video. I just wanted to go through some of the delivery of price that I was able to capitalize on. Also share some of my psychology and things that I've picked up over time. If you haven't followed me on Instagram yet, make sure you guys do that. Hope y'all enjoyed the video. I hope y'all learned something new. It's been BG. I will see y'all in the next video.